Hi guys, welcome back to the channel. My name is Dave, and today I want to talk about the VIX and options. So I heard someone say the other day that the VIX wasn't old enough to drive, meaning that it was under the value of 16, and that is relatively low, and it's a good way to anchor it in our brains, right? Under 16 is relatively low. So I went out and I checked. It was actually down to 13 and a half, and that's where it sits today, very close to 13 and a half, which means it's not able to drive. It's actually like popping its first pimple in the mirror, or it's asking dad, where's this hair coming from? It's puberty VIX. And that's getting pretty darn low. And we might be able to use that to our advantage. Just buying calls and puts, just raking in the money every single day, right? Well, not exactly, but it is a helpful piece of information that we can use with our option trades. So that's what I want to talk about today. If that is what you're looking for, please stick around. Whoop. So first of all, what is the VIX? Well, it's our expectation for volatility in the S&P 500 going forward into the future, 30 days. So what does our range look like? Well, extremely elevated would be something like 50. This is Porsche midlife crisis VIX. We rarely ever see anything like this. And if you're selling options at this point, you're getting lots and lots of premium. But as we come down, we hit levels like 30, which is still elevated, quite elevated. 21 to 20, that's our average actually. And this is our, let's call that our first beer wink wink VIX, right? Then we can come down to about 17, and I don't know, I guess we call that our winger VIX. If you grew up in the 80s, you know what I'm talking about. So 17, that's our median. And then we can continue to go all the way down to around 9. That's our flounder VIX. We're at the bottom of the ocean. We can't go any lower. Historically, we haven't really gone any lower than around 9, I should say. So that's extremely low levels. So sitting at 13 and a half, we are close to the floor, but it doesn't mean that next week we won't be at 13 and a half again. The week after that, we could still be at 13 and a half. Maybe we pop up to 14, then we go down to 11 and a half or 12. So it doesn't mean we are going to see a spike in the VIX. It just means that we're low relative to what our average and our median VIX has been historically. Now here's a nice little chart from CBOE.com, and the first thing they point out here is that it's mean reverting, meaning the VIX index over time will generally return or move back to its historical average. It's not going to move higher in perpetuity, and it's not going to go to zero. Takeaway at the bottom is also important. VIX options and futures should not be used as a long-term buy and hold investment. So we want to be strategic if we decide to make these types of investments. You can see the historical VIX here from 1990 all the way up to 2022, along with what they would call the average here. But you can see the two big VIX spikes from 2008 and 2020. We know what that's about, and you can kind of see our sharp decline that we're on now. But let me point out the sharp decline that we were on back here around 2003 and how we sat here in 2003, and it wasn't really until 2007 that we actually saw this big spike. In between there, we did have some action that would have been able to affect pricing of options, but in general, we had a very long decline. So again, this isn't a guaranteed method where you're going to make money just by investing in some of these products based on the VIX. So with this information in its simplest form, we could say that when the VIX is relatively high, it is a good time to be a seller of option premium because we're going to get those big premiums, and hopefully it will start to settle back down to that average or that median. And when it's relatively low, it's a great time to be buying calls and puts because at this point, it's going to be relatively inexpensive. And if the volatility starts to rise, we're going to get all that added back to our option premium. So you can see, does the level of the VIX affect option premiums and prices? It certainly does. So we can use that to our advantage. Now, again, it doesn't mean the VIX isn't going to continue to stay low, but the floor isn't that far below us. And we sure could take advantage of something if we have the VIX rising really quickly for some unknown reason that isn't in the projection going out 30 days. So with the VIX sitting here at 13 and a half in this low volatility environment, is there anything that we can do to take advantage of this situation from an options perspective? Well, when it comes to options and the VIX, I hear lots of people talking about finding an edge, but I personally find it extremely difficult to find a consistent go-to trade that works well simply when the VIX is low. Now, I tend to gravitate towards things like long strangles and straddles, and what you see here is an example of a long straddle. It's been a good option for me in this type of environment, but I can't say it's my go-to, do it all the time. It's not like that. It's situational. So SPY, it's about $439 a share right now, and if we wanted to do a long straddle in this case, we would buy to open one call At July 21st, I picked out about a month, a 440 strike at the money. I did at the money for both of these. Doesn't have to be a straddle, but that's what I picked. And then I'm going to buy to open a put, same expiration, same strike price. That sets up the straddle. It's pretty simple. Now, one thing that's kind of odd with this one is if you see the value of the call here is about $725 and the value of the put is going to cost me about $555. And that's strange. That's odd. That's not normal. I'll put a video down below. It's from Tom Sosnoff, founder of Tasty Trade. I'm sure you've seen him. Funky hat, really cool guy. Really intelligent. Says lots of great things. I'd like to listen to him. I'll link that video down below. But in the video, he's talking about risk velocity. And one of the reasons that calls are more expensive at this moment, and that's kind of a unique situation. But anyway, go watch that video. So overall, I've got $1,281 in this right, to buy these two, this call and this put. And the situation is that's about $13 that I have to have this thing move in one direction or either. You can see the break even at 427 or 452. So for me to make money at expiration, I needed to go outside one of those points, right? But that does not have to be the situation for me to make money on this trade. I could also make money by having the underlying move 5 or 6 points in the first or second week in either direction, which would give me a nice exit point. I could also make money by having SPY drop, which will typically drive the VIX higher, which will also drive the price of options. So, don't forget, we're in a market right now that is rallying, and this is pushing call prices higher as we see in the disparity between the call and put option prices here. So if the rally continues, that will be good for me. But I don't want to just play one side of this trade because I still lack belief in our overall direction. So if we sputter and fear enters the market, that is good as well with this particular trade. On the other hand, what is not good for this setup is exactly what is expected by the VIX. Boring, slogging sideways, right? VIX continuing to drop. That will get me out of this trade by week 2 or 3 at the latest. So make sure you have define your exit points with this type of trade. That is, take profits early at maybe 20, 30, 40%, depending on timing. And maybe cap a loss at, maybe 50% of your overall investment. You also have flexibility. You can also roll up your put if the market rallies or roll down your call if panic enters the market. That will cost you some money to do that roll, but you can lock in some value that way. Just be sure to have a plan overall. Just set up a plan prior to jumping into a trade like this. But you could also go many other routes, including things like VIX Index options. Now, while you can't buy the VIX, VIX options are one of the most liquid options in existence. So you can jump in there and learn all about it. But it is also one of the most efficient markets you will find, meaning you are going up against pros with deep pockets. So you better be on your toes. You better have a little bit of an edge. They're not hard to use, but they certainly require some additional study. I would also recommend that you do your own due diligence if you decide to get into VIX options like this. And one video that I really enjoyed watching was by Project Finance on trading VIX options. I'll link that video down below. I'm far from the expert when it comes to this type of trade. So again, do a deeper dive yourself, get a better understanding before you plunk down your money. Now, in summary, if you have made it this far, I consider both long straddles and strangles and VIX index options to be a better way to play volatility compared to products like UVXY or VXX. Those products get brought up to me all the time when the VIX is low and people ask questions about it, but I'm not a fan of these, but if you do like to gamble, sometimes they're kind of fun for the occasional home run try, but in general, they're not a product that I would go to. I would prefer what we've already talked about. However, all of these products, even the ones we talked about that I say I prefer, are counting on some market timing to some degree to work in your favor. So use all of these sparingly and with good reason. That's my final warning. So if you are new to options, hopefully this helps you anchor in your brain exactly what high VIX, low VIX looks like, high volatility, low volatility environments look like. It will help you become a better options trader. Now, again, it doesn't mean we're going to start raking it in because now we're a buyer, but it should help you find that pivot point between where you should be collecting premium by selling options and when you should start considering how cheap an option is so you become a buyer. Now, if you have any questions on any of this, please ask down below. I really appreciate you watching, and we'll see you next time. Take care. Whoop.